Welcome to this episode of Market Pulse. It was really a bad week for the past week, and as you can see, all the major indices were down about 3% or even more. The small caps were down like almost 4%, and for the week, the VIX was up a lot, about 25%. So now it was around 17.2. And what's really kind of remarkable is actually the 10-year treasury yield. So it moved up another 12 basis points in the past week. Now it's around a level close at a 4.4 4. So that's really kind of like a high, it's even higher than October 2022, which we're going to talk about just in a little bit, because this is definitely something, we need to kind of pay attention. So first, let's take a look how the actually the SP 500 fared in the past week. Well, you can see this huge red bar right at here. So it closed on Friday at 4320, so 4,320. That's not actually getting to kind of the high it had in August of 2022. So, but it's actually, in terms of this correction, it's still quite reasonable because it was down about 6.3% from the July 27 high. So, and in terms of the time window, now it's been the 8th week. So we are in this correction mode. 1, 2, 3, 4, 5, 6, 7, 8. So we are in the 8th week of this correction. So both in terms of time and then the drawdown, it's quite reasonable, it's just like a typical correction. So at this point, it's not really kind of like anything strange. So, but we need to pay attention to what will happen next. So as we mentioned at the very beginning, what's really kind of remarkable is the 10-year treasury yield. So you can see it's just on a tear, since like beginning of May, and it's just marching higher. So it only had like 3 down weeks, basically in the past, almost like 4 months. And now it closed at 4.44. So this is, a little high, than the level it had, in October 2022, when actually the market bottomed, the broad index, SP 500 bottomed, and then the bear market was kind of over. So when the index, when the 10-year treasury yield, start come down, and that's we can basically claim that the correction will probably be over. So if the 10-year treasury continue kind of much higher, then it will not we cannot really be optimistic about the broad market. So this is something we need to keep an eye on. Now, in terms of technical analysis of the 10-year treasury yield index, the TNX, as you can see, it's since actually the low, just it made, about like 0.05%. That was the 10-year treasury yield rate. And now it's been getting to like 4.44%. So that's a huge match. And so definitely, the treasury mark, all the yield is being high, and so the treasury market has been in a big bear market, since that time. And as you can see, the RSI it closed at 65-ish. So it's getting to this 70% level, and that's indicating an overbought level. In fact, it kind of hit this level. It hasn't been down below 50, for quite a while. So this is like almost like the 3rd or 4th attempt of getting above 70. And as you can see, look at the history, it cannot really stay above 70 for too long. Eventually it has come down, and that will indicate that at that time, the correction should be over, and the broad index will start to kind of move high again. So in terms of actually the target for the SP 500, as you can see, currently we are at 4320. So that's the broad index, the SP 500. So where it could get to? Well, we think that it's likely that it probably will test the 200-day moving average, which is currently around 41.90. So that's a possible sort of target for this correction. And then we also note there's a gap right at here, which is around 42, a little above 42, 42.30, 42.40-ish. So this, both the gap here and then the 200-day moving average are very close by. And note that even if we had a 10% correction from this 4,600 level, so that would bring us like to around a 41.50. So these are the three sort of levels. You can see they're very close by. So which is like around 4,200. So the 4,200 level is really something we should be watching. So somewhere around these kind of levels. So that's what we should be kind of keep an eye on. So anything below that, that will be alarming. If it's significantly below this 10% correction, then that will be alarming. But we cannot really rule out. For example, it could get to this gap right at here. This is around 4,000. It's possible maybe, but if it's a correction, it should not really get to here. If it get to here, then something is not right, and we should really kind of revise our thesis. So in terms of broad picture, on about 3 weeks ago, we pointed out that it's still kind of following along this the two bear markets. The current bear market, which ended on October 12th, 2022, is very much like the other two bear markets that ended on October 9th, 2002, and then another bear market ended on December 4th of 1987. So we are really following along this kind of trend. And so at that time we say, oh, we have a correction here, which is around the 200 trading day from when the market bottom. And indeed, at that time we thought that maybe the correction was over and the market continued much higher. But it turns out that now 3 weeks later, it actually, again, that's what happened on September 1st. And then 3 weeks later, you can see it started keep going down. So you can see that if we follow this kind of pink line, there's just a tiny bit of basically, a drawdown to go, and then the correction will be over. So even if we get to another 2% of correction, another 2% lower, that won't be surprising because it's still kind of in this broad scheme. So so we think like we are kind of in this again, this correction around the 200-day trading day from the bottom. So there's still quite some room, for this bull market, to run. And after that, we have to really kind of think again. And I guess like at some point, recession will come, and then at that time we have to be really kind of careful. So this is all for this episode of Market Pulse. I hope that you have found the information present here interesting and enjoy the video. Market is always kind of changing, and certainly, if you're a long-term investor, there's nothing to be worried because according to my long-term trading signal, we are still kind of in the buy mode. So, nothing to be alarmed yet at this point. We are not definitely like getting into another bear market soon. So this is just basically for long-term investors. Obviously, it's a different story if you're just kind of trading stocks, on a day-to-day basis. Again, thanks a lot, for checking out this video, and your support really kind of is important, for me continue making videos and share my analysis with you. So if you have time, please do not forget to click the like button. And then most importantly, if you have not subscribed to this channel, make sure click the subscribe button, and so that you can get timely updates from this channel. Have a great weekend, and thanks again for your support.